Good morning, traders. It's 8:01 a.m. Chicago time on Monday, the 7th of March, 2016. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The overall sentiment overnight, we have oil up, gold slightly down, Treasury futures, the bonds are flat, the 10s are flat, Eurozone Treasury futures with the Bund up. Asian markets, the Nikkei slightly down, Hang Seng flat, Shanghai slightly up. The Japanese futures are up slightly. Eurozone equities, the DAX is down, FTSE's down, and the CAC 40 is down as well. U.S. equities are down, and the U.S. dollar is slightly up. With that mixture, the overnight sentiment is mixed. Market has a slight risk-off stance as we speak. Driven by generally, it seems like it's driven by the overnight news or the Asian session news. Beijing announced that the economy will grow between 6.5 to 7%, down from 7% from last year's projection. Remember, there's a credibility issue here too. The Hong Kong home sales market has tumbled 70%, 70% year on year. China's FX reserves hit four-year lows. Something else to note: oil is pushing significant highs. It's trading at the highest it's been in the last couple months. Oil is trading at 36.23 on the April 2016 contract, and then finally at 3:30 Central, 4:30 Eastern this morning, the Eurozone March Syntex investor confidence fell to 5.5 versus 8.3. This is the lowest reading since April of 2015. We saw a drop across the board on that release. Looking at what's ahead for this week, since it's Monday, tomorrow we have German industrial production, Eurozone GDP and government spending, ECB's Lind speaking. Wednesday, manufacturing production in the UK and also industrial production. Bank of Canada rate decision, and in the U.S. we have wholesale inventories. On Thursday's the big day of this week, German current account, labor cost, and trade balance. But more significantly, we have the ECB deposit rate and the U.S. monthly budget release. On Friday, we have the German CPI, UK visible trade balance, construction output, and then U.S. imports prices. But the main thing this week is Thursday with the ECB announcement. There are also some articles floating around this weekend about the Fed likely raising rates. So that gets on the front burner again with the Fed drama today. Looking at what we have ahead of us. At 9 Central, 10 Eastern, we have U.S. labor market condition expecting 1.0. And then at 2 o'clock Central, 3 Eastern, we have U.S. consumer credit expecting 16.5 billion. A lot of speakers this morning. 8 o'clock right now. The Eurogroup meeting starts with the roundtable at 8 and a press conference at 11 Central noon, 12 Central, 1 Eastern. At 11 Central, we have Fed Speaker Bernard. At 11:30, we have Fed Speaker Fisher. So a fair amount this morning as well. Let's switch gears and look at what we did on Friday. So the market has been moving through this large composite here. This composite, this red composite, starts on the 24th. That was the big drop day from last summer. And what we've done is we have tested below. You can see here we have a classic higher low on a W formation. So there's your W formation with 40 being the pivot. A higher low on the other side. You can also see this as an inverted head and shoulder if you draw this slightly differently. If you draw this slightly differently, It's kind of a weird shaped head and shoulders, but it pulled back and it broke through and is pushing back into it's moving towards the upper distribution. A huge key figure above, a massive key figure above that you may not be aware of is this 2850 is really large above us. I mean, right now we're trading lower as the market has dropped in the overnight session down to 1986 and a quarter right now. But that's basically where we're headed. And last week, we spent most of the week just moving from one distribution to the next, to the next, and we couldn't quite get through this 2005 and stay up there. We got to 2005 and we rotated back down to close around the open. Note the candlestick type here on Friday. It's basically a doji. The market basically broke lower, broke lower as expected, then pushed higher and finished somewhere near the open. The market is showing indecisiveness. So that's how things are. That's how things shaped up last week. Let's extend this profile forward, and let's look at where we are. So here's what happened last week. The expectation was for it to get responsive, rotate lower. The target, the initial target below was the key LVN right here at 83.50, and then the expectation is for it to chop up, uh, uh, bounce around, and then continue lower to 77.50. That was the expectation uh, from uh, from Friday. Friday was non-farm payrolls. Classically, traditionally, the day after non-farm payrolls has been pretty tight, pretty jittered. And then also remember that this Thursday is the 8:30 Central, right at the open. Technically, is rollover in the U.S. equity market. So we'll start trading the June contract from Thursday morning onwards. A lot of people there's a lot of debate as to when to roll over. A lot of people wait for the volume to roll from March being the front month to June being the front month. Usually that happens around early afternoon on Friday. And so they continue to trade March and quote March. But I roll with the exchange. Um, it skews our volume a little bit to do that. My charts roll with the exchange as well. So I just keep things simple and just cut over to the June 2016 or the M contract. M is a Monica contract on Thursday morning, and then just deal with it for the day. And then the next day, the volume basically moves to June. And then we have expiration. We have quad witching Friday, the following Friday, which is the 18th. Um, and that's how things are shaping up. And then the Friday after that, the 25th is Good Friday. The exchanges are closed for Good Friday, March 25th. That's how things are laying out. But in general, the day after non-farm payrolls is fairly sluggish, and the market has taken a risk-off approach. If we look at the um, overnight session, so here's your announcement on that Centex confidence number. The market dropped pretty rapidly. What we have is a simple double distribution, an uneven double distribution. The market spent a lot of time down here. We're at the lower end of Friday's profile. This looks quite bearish short to intermediate term. The expectation is the market. My main expectation for today is that we are likely to open, make an attempt higher. I expect it to try to push to 1990 or thereabouts. I expect it to find sellers, rotate down, and get down into the 77.50. That would be the primary target for Hypo 1 this morning. Secondary we would move lower first. 1984, 50 will be taken out to fulfill the overnight stat, make an attempt lower, and then in the 1980 area, it would find a base, find the buyers, and rotate back up, in which case we would be likely moving back to 94.75. Giving us about 14, 15 points of range. Again, I'm not expecting too much today. If there is a continuation on Hypo 2, you would have chop, and then we would see it push to 99.50, 2000, the key figure. Again, for this rollover, this 2000 level is going to be very interesting going into expiration. But that's how things are shaping up right now. I know that's very brief. I'll show you a quick view of what Crude has done. Crude has pushed pretty good in out of the most recent distribution. The most recent distribution has been down here. It's uneven to the upside. The market is skewed to the upside. And we're moving into this LVN zone. The LVN zone, the top of the LVN zone is 38.57. So any continuation up in Crude is likely to see resistance in the 38.30 to 38.57 area, and that's what's expected. Currently, Crude is consolidating, tightening up winding up pretty good. But overall, it's traded this lower distribution of the profile, this multi-year low, quite well. I mean, you see how this has accumulated so much volume, and it tapers off as price goes lower. You see volume tapering off. There's less and less interest as it pushes lower, with the highest interest being in the 33.70 area. That's your key magnet in this area, and it's moving away from it. So to me, if anything, it might pull back to 35, chop around, and then continue higher 38. That's in the intermediate to longer term couple of week range in crude oil. Anyway, I'll leave you with that. I'm trying to. My goal is to keep it nice and brief, short and sweet, as they say. If you have any questions, as always, hit me up at futurestrader71.com/contact, or on Twitter at twitter.com/futurestrader71. Good luck today and this week, and we'll keep talking. Take care.